data này ngoài data của Munir.
Hello, dear students. Can you please confirm me? Am I clearly audible and visible to all of you? Can you please kindly confirm me? Kindly confirm me in the chat box. Great. So, dear students, I welcome you all in today's live session, the exam-focused revision session for advanced audit and assurance. I hope and I pray that all of you are doing good. Greetings of the day. And as far as the AAA preparation is concerned, we know that this is a very, what I should say, professional subject, a technical subject, and this is a practice-oriented subject. Okay. As far as the AAA passing strategy is concerned, this session will primarily focus on the passing strategy of AAA. We will try to look at the key concepts which are there in this all important exams, which is in this all important final examination, which is qualification decider for most of these students. And we also try to focus on the exam techniques. What are the key areas? What are the common mistakes of these students, and how the students can overcome those mistakes to cross the passing line? Okay. So I'm your facilitator, Munir Muhammad Shafi, and I'll be guiding you through these sessions. Okay. Brief introduction about myself. Well, I have been teaching this subject since last many years. I myself am a practicing auditor, fellow member of ACCA as well, and Institute of Chartered Accountants of Pakistan as well. And you can also find my contact details. Well, what will be the session agenda? Session agenda, obviously, we won't be discussing much about that what is AAA, because you already know what is AAA. And we are very close to the examinations of AAA. Okay. We will quickly have an overview of the syllabus, paper pattern, and we will quickly move on to the main business, which is the exam techniques of few very key areas and practice. Okay. So, as far as the syllabus of AAA is concerned, we know what are the important areas. We know what are the examinable areas. Okay. For example, ethics, very important area. Quality management is a very important area. Regulatory environment is not a frequently tested area, but the bits and pieces can come up in the questions. You cannot, sorry, I'm not feeling well today, so I'm suffering from flu and cough. So sorry to keep you bearing for that. So you cannot overrule any topic. This topic cannot come up in the examination. This topic will not be examined. No. As a professional student, you should have the knowledge of all the areas, and it's up to examiner. It's examiner's prerogative that which area to test and which not to test. Okay. So quality management, another important area, specifically the professional appointments. This area is very important and comes up a lot. Then obviously planning and conduct of the audit. This is the core area of the audit testing, risk assessment, audit testing, group audit related information. And we know that how important this learning objective is. Completion review and reporting, again, we usually see a question from this area in every attempt. Question number one is usually focused and composed of this area, out of this area. You usually see question 2 or 3 content based on learning objective E. And then we have other assignments in which there are assignments other than audit. And one of the question from 2 or 3 is usually based from this area. Okay, we know how important professional skills marks are. These are the marks for which the students don't have to prepare separately. If the students are focused on exam technique, if the students are properly practicing those exam techniques, then these professional skill marks will automatically flow in their kitty. Okay. And these are the 4 professional skills. And as we move on, as we will start discussing the questions, we will discuss these professional skills within the questions. Number 1 is communication, and we see this communication skills in question number 1. 4 marks are from the communication skills in question number 1, which is for briefing notes, format, in starting, introduction, clarity of expression, and structure of the answer. Then we have analysis and evaluation. We know how important this skill is, specifically when we are talking about AAA, analysis and evaluation, because this is what we are doing in the entire paper. We are analyzing the information and we are evaluating it based on our knowledge and based on the facts and figures given in the question. Then come professional skepticism and judgment. Obviously, being auditor, we are supposed to analyze the information. We are supposed to approach the information with an attitude of professional skepticism. There might be problem statements. There might be wrong treatments, which the CFO, financial controller, might have proposed. So we being auditors should be very particular about all such information which creates suspicion, which are against auditing standards, which are against accounting standards. So we have to be professionally skeptic. We have to think from critical mind, questioning mind. Okay. And many of the areas will require us to apply judgment as well. Obviously, in the world of accounting and auditing, everything is not crystal clear like 2 plus 2 is equal to 4. Obviously, there are estimates, there are judgments involved, and obviously, many figures involve those estimates, judgment. Even the conclusion is or may not be same, which will be given different by different students. Okay. The point is that whatever judgment, whatever conclusion, whatever evaluation you are giving in your exam answers, you have to properly justify based on the logics and arguments which you are proposing. Are you getting this? Then comes commercial acumen. Okay, no, commercial acumen. What is commercial acumen? Commercial acumen is the business sense, the business understanding. And obviously, in questions which usually asks about business risks, which asks about controls, which involve your understanding of the business to be applied in your answers, then commercial acumen plays a very vital role. Okay. Employability and technology skill, that's basically the use of IT tools and resources with the help of which you will be attempting your examinations, obviously. This is the exam pattern. Question 1, question 2, question 3. Question 1 is a 50-mark question. We know this, how important this question is. Make or break question. Usually students feel comfortable attempting this question first. Although there is no proper pattern, you can attempt question 2, you can attempt question number 3. whichever question you like, but usually students prefer attempting question number one first. Why? Because there is a very predictable requirement of audit risk in question number one. Ethics, you will find usually in question number one. Audit procedure, you will find in question number one. So these three requirements you will always be finding in question number one. Are you getting this? So since the students are well versed with those requirements, students have practiced those requirements well, so they are comfortable in attempting this question number one first, which boosts their confidence as well. But there is absolutely no harm if you attempt question two or three in first place. Are you getting this? Okay. When we have question two and question three, we've already discussed. This usually comes up of reporting. One question comprises of the reporting discussion, and the other question comprises of other assignments usually. Uh, and the important fact, which I always keep on emphasizing in my sessions, is that these questions are technique-based questions. If you are able to grip the techniques of the question, you will be able to ace these questions. And if you do not know what is the technique of approaching these questions, you are approaching this without any plan in mind, without any technique in mind. So you might end up ruining your answers. Okay. So we'll discuss that in every question. What is the technique? What is the technique? Are you getting this? Technique based areas. For example, risk assessment. Now, there is a technique for business risk, there is a technique for risk of material necessity. There is a technique to answer ethical, professional, and quality matters. There is a technique to answer procedures and evidence questions. There is a technique to answer reporting questions. Are you getting this? So the point is, you should know the technique. And knowing the technique will not suffice everything. You have to practice those techniques as well. Are you getting this? So as far as past exam trends and analysis is concerned, we'll be all jumping onto the past exam questions. So I think there is no need to discuss the trends because the trend is very predictable. In question number one, you will always see risk of material misstatement, audit procedures, ethics requirement, many times business risk, reporting question, other assignment questions. So we will, inshallah, start tempting the questions up. We'll start approaching the questions as soon as we are done with some prerequisite knowledge. Okay. What are the common reasons of failure for AAA students? Well, we keep on reiterating these reasons again and again. But unfortunately, students keep on exercising these reasons again and again. Students keep on repeating these reasons again and again. Okay. As a result of which, the passing ratio of this subject is not very encouraging. The fault is not about the paper. The fault is not about exams. The fault is of students who do not practice sufficiently. Because I myself have experienced students committing very foolish mistakes when they're appearing in mocks or in any exams. Okay. So, one thing I would like to emphasize here, do attempt your mock exams. Do attempt your mock exams. Don't skip your mocks. It will help you in identifying your mistakes. Okay. So, selective studies, don't do this. Cover holistically, complete course. Poor memory of key accounting standards, poor memory of SBR, lack of paper technique. Students don't know technique. They approach the question uh, without any plan. Students approach the questions with a hazy plan. Okay, this is very important. I fail to emphasize this fact. Accounting standards. Very poor knowledge of accounting standards. And even if the students have this accounting knowledge, they're very poor in drafting the accounting requirements which are applicable in the questions. Lack of paper technique, I've already discussed. Lack of practice, a very important reason of failure. Very, very important reason of failure. Lack of practice. I ask my students that if you're able to attempt 3 to 4 past exam papers completely with your time bound situation, if you were able to attempt your past 4 to 5 past exam, 3 to 4, not 4 to 5 even, 3 to 4, last 3 to 4 past exam papers with a time bound scenario, and then you assess your answers or get it assessed by someone, at least one mark should be marked by someone else, by your tutor. The chances of passing increases 3 times. 3 times. Are you getting this? The chances of passing increase 3 times. Well, poor answer planning, poor writing skills, very common reasons. Failing to understand the requirement, failing to understand the marking scheme. They don't understand the marking scheme, that how much marks are they going to fetch. Students keep on writing for 1 mark or 2 mark requirement, and they write very little for the chunky requirement, for the major requirement. Poor typing speed. If you will not practice, your typing speed will not be up to the mark. Professional skill marks have made things easier for you. Now, 20% of the marks will be based on your professional skills rather than your typed technical content. Are you getting this? 20% marks will be the bonus marks. And if you base these marks on the 80 technical content marks, if you base these marks on 80 technical content marks, content-based marks, then this weightage is 25%. 25% of 80% is 20. So if you focus on 80 marks, 25% marks will automatically flow in your kitty. 25% of 80 marks will automatically flow in your kitty. Are you getting this? So these 25% marks are your bonus marks. For these, you don't have to write anything. You are not writing additional content. These are not content-based marks. So you only have to prepare for 80 content-based marks. You only have to type for 80 content-based marks. And even then, students are struggling in completing the paper on time. That's questionable. Okay. Poor time management, overrunning on a specific part, ignoring technical articles, ignoring examiner reports. And then we have the exam techniques. We'll now be discussing the key exam techniques. Do let me know. Till now, are we on the same wavelength? Please confirm me. Everything crystal clear? Everything okay? Fine. Can you respond, everyone, please? Great. Okay. Now we are moving on to discuss few very key exam techniques. And these exam techniques will be applicable in your questions, which you will be practicing. Number one, ethical threats. Now, as far as ethical threats are concerned, we all know what are those ethical threats. We all know what are those ethical threats. We know there are threats to objectivity. We know that there are five fundamental principles of ethics. There may be violation with respect to those principles. We know there are threats to objectivity. Fundamental principles of ethics, we all know, I hope. And then threats to objectivity, self-interest, self-review, advocacy, familiarity, intimidation, management threat. We all know these threats. Then there could be integrity concerns, there could be confidentiality concerns, there could be conflict of interest related concerns, there could be violation of uh, the principle of professional competence and due care, for example. So we should be able to draft that issue properly. And how can we fetch maximum marks? First of all, we need to identify the threat. Then we have to explain that threat. What do I mean by we have to explain that threat? For example, we have identified a threat, which is a self-review threat. For example, I'm just giving you an example. Request by CFO to provide financial statements, compilation service gives rise to self-review threat. Now, this is the identification of the threat. Are you getting this? This gives rise to self-review threat. Now, some students think that this is enough. Answer is no. This is not enough. You have to explain these threat. Self-review threat arises because the reason. Why is it a self-review threat? Why is it a self-review threat? Because financial statements compiled by the audit team or by the audit firm will again, or you can say will come under their own review during audit. Self-review threat arises because financial statements compiled by the audit team or audit firm will come under their own review during the audit exercise. Are you getting this? This may result in inability to identify their own mistakes or there may be intentional reluctance to identify and highlight their own mistake during audit process, even if it comes to their attention. Now, we have explained self-review threat from two perspectives. Number one, self-review threat arises. Okay. Just hold on. Okay. This is the reason. So this may result. Okay. Let me separate out everything clearly. Self-review threat arises because financial statements compiled by the audit team or firm will come under their own review during the audit exercise. This may result in inability to identify their own mistakes. Why? Because if I am doing something and I again have a review of that thing, I might not be able to find out my mistakes. And it's very unintentional. Are you getting this? Inability. I'm not able to identify my own mistakes. Or the other factor, there may be intentional reluctance to identify and highlight their own mistake during the audit process, even if it comes to their attention. They might intentionally try to hide out their mistakes. And that is a more dangerous thing. Are you getting this? So when we explain self-review threat in this manner, it's complete. Are you getting this? And then we can propose any safeguard. There could be various safeguards. Separate teams could be used. Those teams, the work of those teams could be reviewed by any third partner. Separate office can undertake different assignments of our own firm, separate offices of our own firm. Or if law doesn't allow us to compile financial statements, we can refuse this assignment. So there could be various safeguards. So when we complete a threat from all perspective, we get full marks. Are you getting this? So, as I've already written here, mentioned here, let me try to move this box. It's making some problems. Okay. So, I already mentioned here the 0.5 marks are for identification, 0.5 to 1 mark. There could be, if the explanation is sufficient enough, there could be 1 mark. There could be a award of 1 mark even. Okay. Plus 1 mark for relevant safeguard and action as per significance. Safeguard and action. Safeguard means you opt that action. Okay. So I hope and I believe that this is crystal clear to all of you. Threat, drafting of threat. Okay. Ethical threat. Moving on. Okay. There could be a question which may ask you about ethical and professional considerations, not only ethical and professional considerations, or even some questions may ask about ethical, quality management, and professional issues. Ethical, quality management, or professional considerations. The question requirement may require you to identify all three. So, first of all, you should be able to distinguish between these three factors. ethical considerations, quality management, and then professional considerations. Are you getting this? Ethical considerations. We have just discussed threats to objectivity, confidentiality concerns, client integrity issues, conflict of interest. You will find any of these issues in the given scenario. What could be the potential professional considerations? There could be money laundering, non-compliance of laws, regulations. There could be anything relating to auditor's liability, the reporting implications, the opinion implication, the distribution implications, practice management concerns. Okay. Advertising related concerns, tendering related concerns, quality management related concerns, impact on audit. Does the situation warrant you or requires you to issue a modified opinion in the situation? Impact on audit. Okay. So, what you have to do, you have to apply your knowledge and you have to identify what is the problem statement. And the next step is to explain that in the very similar fashion which I've just demonstrated you. Are you getting this? Okay, moving on. So we will discuss these techniques and then we will be jumping on to our first question. Business risk. Now, what is business risk? A very important requirement which you will usually see in question number 1. Business risk. As we know that assessing audit risk is very important because we being auditors are very much concerned about our risk. What is the risk? The risk for us is that our deliverables can get wrong. Our opinion can get wrong. Our audit opinion can get wrong. And our opinion can get wrong on account of various dangerous factors. What are those dangerous factors? There could be risks of material misstatements in the financial statements, which we might be unable to identify. So what the problem is, there could be misstatements in the numbers of the financial statements, but we currently are unable to identify what's the issue, what's the problem. And this is the reason why we have been appointed to identify those problems. But can we identify all the problems? Answer is no. So as far as the misstatements are concerned, these are caused by various risk factors. But what in actual or what in the first place is giving rise to those factors? The problems associated with the business. When the problems associated with the business are identified and evaluated, this may help us out in identifying the risk associated with the numbers. Therefore, first we identify business risk. Business risk. What are the risks associated with the business? What are the risks associated with the performance of the business? Here, we are not concerned about the misstatements in the numbers of the financial statements. There could be lots of problems. There could be cutoff issues, there could be system issues, there could be manual misstatements, problems. There could be a lot of problems. We are not concerned about the misstatements at this first place, in this first place. So what we are concerned about? We are concerned about the business risks. What could go wrong with the business? How the business can suffer? So a question can arise that why we being auditors are very much concerned about the business. Are we the business owners? Are we the directors? Are we CEO? As if we're thinking in that pattern. Answer is no. We are not business owners. We are not directors. We are not CEO. But we have to think like these people. We have to think like these people. We have to think like these people that how are they foreseeing the problems with the business? Which factor they foresee will result in reduction of profits? which factor they foresee will result in. Okay, just give me a second. Here. Business risk. So what we have to do, we have to identify the information from the scenario creating that risk. And we have to explain the impact which it will be having on business operations. In this place, we are not concerned about the misstatements in the numbers of the financial statements. I'm making you very clear about that. Okay. We are concerned about the business operations. We are concerned about the problems with the business. And then we may also link the relevant numbers or the parameters which may be given to us. For example, the sales are decreasing, cash position is deteriorating. We may link up those numbers. But the linking of those numbers is not to focus or highlight the misstatements in the financial statements. Be very clear about this. The use of those numbers will only be to help assessing performance of the business. Okay. And here, let me tell you very clearly one thing. Important note. Students have to link their business risks with either or aggregate of these factors, decreasing revenues, deteriorating cash flows, reduction these are the factors which you have to link up with the drafting of your business risk. You have identified a business risk and you are saying that competition for the products have increased a lot, which creates business risk. Okay, this is a business risk, I agree. But why is it a business risk? Have you explained it? This is a business risk because we have to sell the product at lower rates. Is it enough information? Is it enough explanation? Answer is no. Then we will sell the products at the lower rates to meet the competition. Our revenues will be decreased. Loss of revenue. It will result in loss of revenues. It will result in reduced profitability. Are you getting this? And increased competition or the advent of the newer products might result in your inventory losses. Again, impacts on profitability. So we have to think of a business risk from these perspectives. Or suppose a significant customer has gone bankrupt and 90% of our sales are from that customer, 80% of our sales are from that customer. Don't you think this may even result in the going concern problem of our business? This factor, going concern problem, this is not an accounting terminology. This is a business terminology. That business might not be able to continue in the foreseeable future. We, being accountants, take this event as a very major event to disclose something in the financial statements, to have proper disclosures, to have proper treatments in the financial statements. But in the first place, going concern issue is a business issue. We all know this. Okay. So we have to link up the business risk. Okay. So we'll be moving on to business risks. We'll be moving on to a question which will be having business risks. Then we are having another exam technique, which is risk of material misstatement. For example, okay, first of all, let us have a look at the exam technique of risk of material misstatement. Okay, when we talk about the risk of material misstatement, there is a slight difference. Okay, so there's call for prayers, azan time. So I'm taking 1 minute silence because in my background, azan is going on. Well, so risk of material misstatement. Loosely, we also sometimes say audit risk. But we should be very much clear about the fact that audit risk does not only contain risk of material misstatement, it also contains detection risk. So, what is risk of material misstatement alone? It means inherent risk and control risk. So, basically, if we open this, it becomes inherent risk, control risk, detection risk. So, what does this mean? This simply means that if the question asks about the audit risk, if there is a detection risk in that question, you have to identify, you have to explain. But if the question talks about risk of material misstatement or financial statement risks, then you may safely ignore detection risk. Are you getting this? We know that inherent risks are the default risks attached to the account balances and assertions. For example, estimates, judgments. Control risk is a risk that controls might not be able to identify any problem. So these are the two risk of material misstatements. As far as detection risk is concerned, this is a risk which is in the auditor's hand. The other two are not in the auditor's hand. Auditor can fine tune detection risk, but auditor cannot undo or change inherent risk or control risk because we are auditing historical information and damage has already been done. If there has been inherent risk, it might already have impacted the financial statements. If there had been control risk, it might already have impacted the financial statements. So I, being auditor, cannot do much about that. But what I can do what is in my own hands. I can catch those misstatements by efficient procedures, by good sampling, by professional skepticism, and blah blah. Okay. So, exam technique of risk of material misstatements. If the numbers are given, we have to calculate materiality. We have to identify which financial statement area is under problem. We even have to identify which is the risk type, inherent control detection. We then have to focus on accounting treatment. What is the relevant requirement? And why we feel there is a risk? Why we feel this requirement is not being applied? We have to apply the contents on the of the scenario on this accounting requirement. Then we have to use analytical procedures to identify the relevant trends. And last but not the least, we also have to identify the risk impact. Is it the risk of understatement or overstatement? And specific area should be identified. It's not that expense will be overstated and no. Which under expense, revenue expenditure? Which item under balance sheet? Fixed assets, inventory. Okay, property, plant, equipment, inventory, receivables. Which is under the risk? Provisions. Are you getting this? So then we take care of all these elements. We land at a properly drafted audit risk. This is the marking scheme. We'll discuss it later, but we'll have a look at the example. See this. This example of audit risk. During the year, the company purchased shares with a cost of $200,000. Now we are concerned about the misstatement and materiality, which have a fair value at reporting date 250,000, cost of 200,000, fair value of 250,000. And there's a difference of 50,000, which represents 1.5% of the total assets, which is material. So this is how we will be calculating and explaining the materiality of the amounts involved. Then comes the requirement and the respective areas. We've already identified the areas, the investment, the shares. In accordance with IFRS 9, even if we do not remember the accounting standard number, we can simply say in accordance with the relevant accounting standard. The shares should be measured at fair value through statement of profit and loss, unless a designation is made to be measured at fair value through OCI. We cannot keep it at cost. Okay? The shares should be valued at the share price at the reporting date, and any increase or decrease should be taken to SOPL or OCI. So the shares are valued at cost in the statement of financial position, which means investment and profits or OCI is understated by $50,000. So let's see all the elements have been satisfied or not. Materiality, accounting standard, application of the accounting standard, understatement or restatement, impact, risk impact. So all the factors, all the elements have been duly satisfied, which will result in the maximum marks you can score for this. Are you getting this? So this is particularly very important when you talk about the audit risk. Are you getting this? So having said that, and without discussing the other easy aspects any further, I would want you people to take on a real exam question which is September, December 23. It's one. And they are moving on to a break. This break will be a lengthier one because it's a prayers break. I'll be offering my prayers. So this will be a break, but this will be a break for me. And you will be attempting this question in this break. You will try to attempt the requirement of business risk and audit risk and ethical consideration as well. Because see, the requirements are given there in the partner's email. And then we will jointly go through this question, the key elements of this question. And I'll guide you that how we should have approached this question. So first of all, you will be reading this, you will be trying to identify things in the question, the business risks, the risk of material misstatement, ethical issues, and then we will be jointly looking at this question. So I'm moving on to the prayers break, and you're starting attempting this question. Okay. Dear students, am I audible to all of you? Please confirm me. Great. Okay. So, requirement. Okay, so we are starting our discussion. We are starting our discussion relating to the question. So, we have this question number 1 from September, December 23. We know the main window gives us the background information about the client. Then there are a number of exhibits. The actual content of the question, which we will be using to draft our answers. All the time, first exhibit will be partner's email, and you will find all the requirements in the partner's email. Okay. Then there are group structure and activities, financial information, business developments, and additional services. These exhibits may change from time to time, but usually you will see in the similar order. For example, you will always see partner's email as first exhibit, then background information is the second exhibit. So this is sort of background information. Financial information, the numbers you will be given in the question most of the time, so that you can use those numbers with your drafting of answers and link up with the given information. Additional business developments and additional services. Okay, so requirement, we know the requirement. You have to respond whatever the partner has asked you, audit partner, the senior most person of the audit team, your firm. And we know the 10 professional marks in question number 1. Okay. So the main content, the preface content of the question. So I'm starting discussing this. Okay. So we have to even highlight certain aspects in this briefing notes section. Okay, we also have this scratch pad for the rough working and planning, but I will recommend using this briefing note section even to plan your answers. Okay. Let's see the partner's email. Okay. So the partners has drafted this email, and partner has sent this email to audit manager. So we will find the requirements in this email. This is the answer plan. And this is the background preface information. So it is 1st of July 2005. Question number 1 will almost all the times be set for the planning phase. This is the planning question, planning and conduct of the audit. So this is the planning phase. As you can see, the year end is 30th September, and it is 1st of July. So that means you are at planning stage of the audit. You are the manager in the audit department with Stanley Associates, a firm of chartered certified accountants responsible for the audit of Hammer Group, the group which is not a listed company. Operates a number of hardware stores which supply trade customers and public. This is not a listed company. Okay, this is an important piece of information because we know that this piece of information is even important when we are attempting ethics part. Your firm audits all components of the group, including a foreign subsidiary acquired during the year. Okay. So this piece of information is interesting. A foreign subsidiary acquired during the year. So it may have some consolidation implications. The following exhibits available on the left-hand side of the screen provide information relevant to the question. The first one is the partner's email. First one is the partner's email, an email which you have received from Paula Sanders, the audit engagement partner. We're going to read that. Group structure and activities, the activities of the group, outlining the group structure and activities relating to the audit planning, financial information, extracts from the projected consolidated financial statements, business developments, information relevant to the audit planning, and additional services detailed in the relation to the services which Stanley Associates has been asked to perform. So these are the additional services which the client has asked for. And we'll see the details in this exhibit. Okay. So number one, partner's email. So I met. So audit partner sending email to the audit manager relating to the Hammer Group's audit planning. I met with the group finance director yesterday along with representatives from the group audit committee. We discussed the group's activities during the year and its plan to expand into further international markets. This is an important piece of information. They are planning to further expand in international market. They also provided me with some extracts from the projected consolidated financial statements and a selection of KPIs. I've also provided you with some background information about the group to assist with the planning of the audit. So all these exhibits contain the information which the partner is referring to. Based on the analysis which I have done on this industry, it is appropriate for overall materiality to be based on revenue. So examiner is kind enough to give you the materiality benchmark. Earlier, this was usually not specified by the examiner before September 2022. Okay. Now the examiner specifies the materiality benchmark. So you have to use this benchmark. Okay. That's easy for you. You will need to determine and apply an appropriate materiality threshold in your briefing notes. But yes, benchmark has been given, but you have to apply an appropriate materiality threshold. Should it be a lower limit? Should it be the upper limit? Should it be the middle limit? It depends upon whether there are high risks or not. Usually, if the client is the recurring client and there are not many risks, you can take the higher limit as well. Okay, for example, 5 to 10% of the profits, you can take 10%. Okay. 0.5 to 1%, you can take 1%. But whenever higher risk is involved, and obviously, when we talk about a question in which there are multiple risks given to us, we cannot say that the entity is not a risky one. Apologies. So there will be risks, obviously. So what you can do, you can take the lower materiality threshold. Okay, but you have to explain it. That based on these risks, we are taking the lower threshold. And this is just an initial measure, initial estimate. And as we move on with the audit progress, the materiality can change. And we'll see how to draft it. You will need to determine and apply an appropriate materiality threshold in your briefing notes. Using the information below, I require you to prepare briefing notes for my use in which you evaluate the business risks faced by the group. Evaluate and prioritize risks of material misstatements. Then you are also required to give audit procedures. And then you're required to identify ethical issues. You should keep this in mind that for ethical issues, you should be using exhibit number 5. For audit procedures, you should be using exhibit number 4. But for risk evaluation, we're referring to exhibit 2, 3, and 4. All the 3 exhibits. So for identifying and drafting business risks and risks of material misstatement, you should be making use of all the 3 exhibits. Are you getting this? Dear students, is this crystal clear to all of you? Okay. So whenever a question gives you the requirement for both business risk and risk of material misstatement, it is advisable initially make a table like this, where because there could be business risks which may help you out in identifying the related risk of material misstatement. Okay. So as we move on to read the question, you will be identifying. Okay, why this is not expanding? Okay. Okay. Let us see one more thing. Okay. So these are the benchmarks. Okay, so ignore this diagram because I made this diagram in the previous sessions to explain this concept. Okay, so 0.5 to 1% of revenues, 1 to 2% of assets, and 5 to 10% of the materiality benchmark. Okay. So we are starting reading this information. We will try to identify the problems, if any, together. Business risks and risks of material misstatements. Curly, usually it's 0.5 to 1%. Usually. Widely used. Okay. But you can use 1 to 2%. But widely used is 0.5 to 1%. Okay. So it's advisable to use the common percentages, generally used percentages. Okay. So the group operates a number of large hardware stores within the domestic market. They store supply building materials and equipment to the public and builders. The Hammer brand, which is internally generated and not recognized in the consolidated statement of financial position, is key to the group's success. So, brand is very important. It is internally generated and not recognized. So, rightly do so, rightly done so. One of the group's subsidiaries, Ranchco, is a financial services company specializing in providing saving accounts and loans to individuals. So one of the group subsidiaries is providing financial services. Core businesses, supply of building materials and hardwares. One of the group companies is dealing in financial services and providing saving accounts and loans to individual. So don't you think, okay, can we say that, can we say that, uh, okay, I am foreseeing business risk number one. So every piece of information gives us a food for thought. Can we say that financial services business which is unrelated to existing operations or domain may the business may lack experience in dealing in financial services and it may result in lack of business oversight, or you can say okay, they don't have experience, can result in control lapses, losses, high operating expenses. We'll see what additional information we get as we move on. But for the point, at this point of time, we have jotted down few pointers. We may change these as we move on, but whatever is coming in my mind, I have thrown it down here in the planning phase. Okay. And the financial services business. We lack experience. This is not our existing domain. We might not do good here. We might, okay. Yeah. Failure to manage operations efficiently. You can, right. This may be better. Failure to manage operations, uh, which may impact profits or profitability. Right. And we can say, since it is different segment, so there could be IFRS 8 operating segment implications. But since the group is not a listed entity, not a compulsory requirement at the moment. But we don't know if we move on further and if we get some information that group is soon going to be listed, then yes, this will have its importance. So whatever is coming in my mind, I have thrown it down in the planning pointers. Knowledge Co is a wholly owned subsidiary and operates a hammer store. Okay, so we are talking about we are talking about another subsidiary, Knowledge Co. Is a wholly owned subsidiary. I hope you can see my screen. Yes. Okay. It generates the majority of the group's income. So obviously, this subsidiary is very important. Molletco owns 50 retail stores across the country. Molletco has been involved in a price war with another national hardware store. Okay, price war. That's an important piece of information. During the year, offering significant discounts and heavily marketing the Hammer brand in an attempt to increase the market share. Okay. So another business risk is in the platter given by the examiner. Highly competitive environment. And we have been feeded by the examiner a lot of food for thought. Significant discounts, heavy marketing. Okay. So, what could be the business problems? Can anyone tell me? Can anyone suggest me? What could be because here the examiner is giving you very simple things in the platter. Can anyone suggest me? What could be the business risks here? If anyone, if you've identified. Anyone? Early. Very good. So, as the environment is highly competitive, so the price war results in reduction of prices, impact price war and discounts will result in reduction of prices, or you can just say this will impact profitability and liquidity, losing customers, risk of losing customers to competitors, loss of future revenue as well. Okay, loss of future revenue as well, because competitors will take up our customers and will capture, they'll keep on capturing the market share. Are you getting this? Then high expenditure on marketing. This will result in uh, impact on profitability. And burn on cash flows. Hmm. Are you getting this? And can you think of any financial statement risk or risk of material misstatement on account of this problem? Because this is why we have made two columns. With the help of this information or related business risk, we will try to identify the risk of material misstatement. Can anyone tell me what could be the related risk of material misstatement here in this case? We are not jumping the gun. We are simply moving on as we are reading the information, and we are keep on jotting the points which are coming into our mind. Obviously, when we will move on further in the question, there will be additional information which we will come across. So we will make use of that information and we can refine these pointers later on as well. Okay. Curly. Well, you tried well, but you're not on target. Here, we may have IAS2 implications. Risk of inventory being overvalued. How? Because IS2 says inventory should be lower of cost or NRV. And this may be possible that the product's NRV may be the lower figure on account of price war and discounts. Okay, Curly, no issues. So there may be so quick price reductions that as the year has ended, new year has started, and we might be forced to sell the inventory even lower than cost because we have to sustain the competition. Competitor is reducing the prices. So there may be a situation, there may be a possibility, there may be a risk that the NRV goes below the cost. Okay. And this might not have been accounted for. So what will be the impact? Obviously, we will first of all check materiality if the figures are given. Now, is two implications, and then we'll see the risk impact. And what is the risk impact? Inventory and cost of goods sold. Okay. Okay. Let's move further. Ladder Co. Oh, this is very interesting information. Ladder Co. is an overseas subsidiary situated in Farland. That means this is an international subsidiary. Okay. Because we already read this information. The foreign subsidiary acquired. Okay. And this is what the subsidiary is. This is the subsidiary. It's an overseas subsidiary. Okay. Situated in Farland, the group obtained 65% of shareholding in October 2004 for the year acquisition, obviously. And has paid some cash consideration of $82 million. The share purchase was financed partly using a $32 million bank loan with a variable interest rate, which was taken out in October 2004, and partly through the group's existing cash reserves. The bank loan has covenants attached to it in relation to the interest cover and gearing. Okay, whenever we read any information, we have to think what if it doesn't happen? What if it goes wrong? So, can we think of a situation where this information bears negative fruit for the business? For example, okay. So, obviously, when we are expending so much for acquisitions, we'll fall short of cash. Management may lack skills and experience in managing international operations. Operational, there could be operational inefficiencies, and it could result in increased cost and interest is variable interest rate. Yes, clearly, you're right. Sorry, what I was talking about, I forgot. Yeah, variable interest rate. Variability of the interest rate exposure to interest rate volatility. If interest goes high, profits impacted. Okay, then there are covenants attached to it. So there are lots of points. Utilization of cash reserve with significant bank loan, it will create pressure on cash flow or operations. Management may lack skills and experience in managing international operations, operational inefficiencies, laws and regulations. You can also write variability of interest exposure to interest rate volatility. Interest high, then profits may be impacted. Non-fulfillment of attached covenants may result in entire loan becoming repayable to bank. There could be significant cash flow problems. So, if we have drafted the pointers, even if in less than these words, that's enough. Because we should be able to know that how can we fetch our answers through with the help of these pointers. That's the main purpose of pointers. Are you getting this? Okay. Then another important element. How much the group has obtained? 65%. There is some interesting piece of information which is coming up. The purpose of the acquisition was to expand the government's operation into a new geographical market. This is the first overseas investment made by Hammer Group. The purpose of the acquisition was to expand the group's operation into a new geographical market. This is the first overseas investment made by the Hammer Group. Lettergo is owned by government of Finland due to regulatory requirement that at least that portion of company's share capital is government owned. The currency is Finland is the same as the currency in which the group is based. So here many students identify foreign currency risk, but foreign currency risk or exchange risk doesn't exist because it has been given in the question that okay. The currency is same as the foreign. Okay. Your firm was appointed as auditor of Ladderco, and several members of the audit team have traveled to Foreign and become familiar with the company. Its key management personnel regulatory environment. Foreign does not mandate the use of IFRS. Okay. So can we say here? Okay, can we say by the virtue of this piece of information owned by government of Foreign due to a regulatory requirement that at least that portion of company's share capital is government owned? If so, can we say that? Okay, what could be the financial statement risk? Problem is, even the company has 65% of the equity shares, but the remaining 35% is with the government. And those shares might be preferential shares. Those might have extra voting powers. Those might be more crucial shares. Okay. So, uh, the government may hinder the decision making of our company, even though our company has the majority stake. But the regulatory authorities, the government, may have some additional rights attached to that 35%. And there may be a possibility that even the control does not exist. Because when we consolidate the financial statements, when there is a control established, okay, so there may be a possibility that even the company cannot exercise the control over this subsidiary. Are you getting this? Due to regulatory requirement that that portion of a company's share capital is government owned, the currency in Parliament is same, perfectly fine. Your firm was appointed as auditor of Lararco in two audits. Foreign several members of the audit team have traveled. Currently, if this is the business risk, you haven't linked it up with the loss of revenues, cash flow burden, and decrease in profits. You have to link it up, as I already told you, requested you. Okay. So your firm was appointed as auditor of Lararco, and several members of the audit team have traveled to Farland to become familiar with the company, its key management personnel and regulatory environment. Farland does not mandate the use of IFRS and Lararco financial statements are prepared using Farland's national accounting standards. This is another issue. So the issue number one was government might have shares. This may result in Okay. If the government has special powers for decision, this company may not even become a subsidiary. IFRS 10 requirements. You have to explain this. Are you getting this? Explanation is the key to success. First of all, you have to jot down the pointers. You have to jot down the pointers. Okay. And you have to jot down many such pointers. We have just started reading the question. We've just started reading the question. Okay. There is a lot in the question. For example, the firm was appointed as auditor and several members of the team have traveled to far land to become familiar with the company. So it means that they are not familiar with the company. Okay. They lack experience, skills, have no knowledge of laws and regulations, lack of knowledge. They don't have knowledge of laws and regulations. Okay. Control issue. Then we have, okay. Fallen does not mandate the use of IFRS. And we know as per IFRS 3, IFRS 3 requires us that groups, policies, so what they're supposed to do, they're supposed to pass what is the risk, appropriate adjustment entries, might not have been passed. Are you getting this? And from here, obviously, you can draft this risk. Okay, unfortunately, I'm not feeling well. Having a lot of itching in the throat, cough as well, flu as well. So I would request you just do one thing. Try to attempt this question in June 2023. This one completely in June 23. These two questions. Question number one with ethics part. Okay. And then we will jointly discuss these and we will see the drafting of your answers, whatever you have drafted. Okay. So, because my throat cough is not allowing me to expand this session further. So I'll take your excuse, I'll take your leave, and we will continue the discussion tomorrow. But I request you to draft your answers, at least draft two business risks, two risks of material misstatements, and show me tomorrow so I can read your risks, whatever you have written. so that I can give you the feedback, whether you've written it properly or not. Okay. Thank you, Curly. So see you tomorrow, hopefully the same time. And we'll be targeting December and June. 2 attempts. Question number 1. Okay. See you tomorrow. Thank you very much. Take care a lot. Bye bye.